was an absolute pleasure for me to interact with him, especially when he said about what about those traders or SMEs sitting helpless in various parts of the world on account of no capital or payment capacity. Shaping the world and the future of trade finance, this decentralized protocol provides real-world borrowers access to low-interest and swift financing to free up capital, and especially critical working capital that is tapped from the crypto lenders. So presenting Polytrade bridges the gaps in traditional receivables financed and accessing the untapped crypto liquidity. So basically a veteran in business transformation and product management and experienced in building and scaling sustainable businesses, our next speaker comes with a 15-year-long rich consulting and business management experience. Early 2017, he started dabbling away with the blockchain and cryptocurrencies world. And today, he stands tall for the thriving Polytrade. Give it up for the CEO, Arul Prakash. Arul, welcome to DotFriday, and we are all ears to hear what your story and the Polytrade story is.
Awesome. Thank you very much for this opportunity to talk with a completely new and a different set of crowd than I'm usually used to. And it's always great to see that we're putting in so much effort from an Indian ecosystem perspective to get us in front of blockchain. I mean, I believe we had a lot of opportunity way back when the century started to be in front in terms of the internet businesses, but somewhere either those opportunities move abroad or the people who created those opportunities moved abroad, right? But this, I think, is a great reset for all of us, not just from a economy perspective, but also from a tech superiority that we should be able to establish ourselves, right? So it is great that Polkadot India is taking such an initiative and bringing in a lot of real world businesses, projects, and also like Varun was sharing, and I was learning a lot of new things about how Polkadot works. It's really interesting that we're all able to share all of this. So like Ananya had mentioned, started off with blockchain somewhere around 2017. Much before that, most of my work was with the retail and consumer goods industry, and I was working with TCS as part of the business consulting team for about 5-6 years. And then I was with Accenture Strategy Consulting, again based out of India, and worked on global projects and Indian projects as such. Specifically focused around how to build and scale businesses, and because I had a lot of a tech affiliation, always all my solutions definitely included technology as one of the levers to achieve that. And since 2017 or so, like I said, was dabbling around with blockchain and crypto. And during that course, also I joined Tata Digital, which is again, I'm sure you would have read through quite a few news. It's growing rapidly, and I was heading the product development for all the Tata brands. And for the last 4-5 months, been driving Polytrade from a crypto perspective, and operating as a CEO for it. So what I'll do is, Ananya gave a very long, arduous explanation of what Polytrade is. But I'm sure as usually the audience doesn't get it, largely because it is a concept that most people are not aware of. Only the people who are actually in the industry actually get to know about trade finance or invoice receivables as such. So I'll just go about explaining what the business problem that we're trying to solve. Then I think the technical technology solution and how we are trying to solve it with blockchain will kind of fit into the place as such, right? So specifically, the area that we're working on is part of trade finance. Okay. Now, trade finance is a $7 trillion industry, right? Not billion, $7 trillion industry every year. As an industry, it's about 7 centuries old. So we are not innovating specifically, largely because we are trying to modify or improve an existing process as such, right? That is our specific goal. Now, if you see within trade finance industry, because it has been going for so many years, much of the markets is also consolidated, which means that large finance providers are more or less kind of, it kind of merges onto the top, right? So you will have your ABN AMRO and Citibank and these kind of organizations largely driving the large businesses. So what happens is they've been really old. They've been there for quite some for decades together, and their processes that they have been following, because the industry is also old, the company is also old, the process that they follow also is quite old. And because of that, there is a lot of overhead that a lot of these organizations have. Now, how does this overhead translate in terms of businesses? If I am, say, a manufacturer, if I am bringing them a business of, say, $100,000, right? They are less inclined to encourage me rather than someone bringing a business of $1 million or a $5 million. That's because their overhead is very high. That is the first thing. Second thing is that the time taken to do any particular task also increases a lot. Obviously, that comes with its own rigor. Not saying that all the processes are redundant. It comes with certain size and scale and risk aversion that these organizations actually have. And because of these two specific issues, the challenge that comes up is, out of the $7 trillion industry is something that is already existing, right? What is not getting addressed is something close to $1.6 trillion, right? That's quite a large chunk of 7 trillion. Now, this $1.6 trillion worth of industry which is not getting addressed typically caters to all the SMEs, right? When I say SMEs, it is small and medium enterprises. And this is a problem not just in emerging markets, but is also a common problem in the developed markets as well. So Polytrade specifically is trying to address the market of these small and medium enterprises by providing them access to working capital. Okay. Now, let me break it down again, what it means to when I say working capital, right? So what happens is, okay, within trade finance, we are trying to solve a problem called invoice receivable financing. Okay. Now, if I were to give an example of what typically happens, imagine there is a manufacturer sitting out of Ludhiana or Tirupur or any of the bells, right? And he is supplying to the likes of Zara or Walmart. Now, Walmart typically would receive the shipment and make the payment to the manufacturer after a certain number of days. And these days can range anywhere between 30 days to 120 days based on what category of product it is, right? Whether it is consumable, is it an electronic, whether it is an apparel. And typically apparel and footwear have the longest duration of credit period as such, which can extend up to 120 days and so on. So what happens for 120 days is that the manufacturer has manufactured his products, delivered his products to Walmart. Walmart has accepted it, and Walmart says, I will pay you after 60 days. So there is a severe crunch of cash that the manufacturer has, because one, he has to pay his own raw material suppliers. He has to pay salary to his employees. He has to pay electricity bills, right? So he doesn't have cash to do that particular activity. And this is exactly what we call as working capital, right? You need certain capital to run your business. Now, typically in the industry, what happens is he would typically approach a non-banking financial entity, NBFC or any other lender, and kind of ask them for money, right? And if they are a small invoice person, if they say their invoice is only about $20,000-$30,000, the inclination of the banks or the large entities to encourage him is very less, which basically means that because of working capital crunch, he is not able to work on further orders that he could have delivered to probably another retailer, say in the UK, right? So that working capital crunch actually limits his business growth. That is the impact that it causes. Now, what does invoice receivable financing do? It basically ensures that we are able to provide him that working capital. Now, I mean, everyone is aware of, AWE and compound and other protocols that are available where you have borrowing and lending function. But there are two issues with that. One is there is obviously a very high barrier of knowledge around crypto. And second is that all of those are loans which have to come with a collateral, right? Which means that I need to deposit cash to take cash. And obviously the problem that we're trying to solve here itself is cash. So what we do is we take the invoice that the manufacturer has received from Walmart and say that I will take this invoice as a collateral and I will fund your invoice. Okay. So if his invoice value is say $100, we tell the manufacturer, okay, give me your invoice. I will provide you $95 today, right? And he will get the $95 cash and he's able to run his business further. After 60 days, I go back to Walmart and I tell Walmart, see, I have this invoice that you were supposed to pay this particular manufacturer. I would like to have that invoice payment against that particular invoice, right? So I get the $100 from Walmart. So the difference of that $100 and $95 that I actually gave to the manufacturer is basically the margin that I make on the business, right? So this is what has conventionally been going on. There is nothing new on this. This is exactly what we're trying to replicate, but from a crypto business perspective. Now, why are we doing it in crypto is that, like I said, the SME financing itself is a major hassle when it goes to larger enterprises, which exactly we are able to cater. Why we are able to cater is because we are going in more from a digital native model, right? We are not a centuries old process that we're following, a decades old processes that we're following, which makes us slow or redundant. So we are making it completely digital, thereby reducing the time taken to fund that particular person. Now, usually the what people ask is that, are you going to give it at a lesser interest rate than a bank? Why would they come to you, right? Those kind of questions are what typically get asked. But we need to understand the pain point that the SME has. The manufacturer's pain point is not cost of capital, right? It is access to capital, which basically means if a bank is giving him, say at an interest rate of 10%, okay, he is happy to pay 15% if you're willing to finance him today rather than make him wait for 3 weeks. Right? So it is access to capital, which is the issue that we're trying to solve, not exactly cost to capital. That is one of the points from a business perspective. And also, if you say, I'm sure, there is, how many people do we have here? We have about 62 people, right? And I'm quite sure that, at least about 40 to 45 people do not have an understanding of trade finance as a business, right? Or even are even aware that it is an asset class. It is a place where people actually invest money. Just like you invest in mutual fund and stocks, there are mechanisms where individuals can actually invest, not exactly individuals, but larger enterprises can actually invest in invoice receivable financing as a business because it is extremely lucrative, right? The APYs that get offered here are almost double than what a FD account can actually provide to any one of us. So we are trying to also democratize that particular process. We are trying to bring that down to an individual. Today, if I were to get an exposure to an asset class like an invoice receivable financing business, I should have probably a minimum check size of around $100,000 or so, right? Obviously, different places, different regulations apply, but most of the markets, it becomes completely unviable for us to, invest $100,000 in a particular single asset class as such. So by putting it via crypto, we make it as simple as even $1,000 or even $100 person will be able to get an exposure onto an asset class like invoice receivable financing. So that is more so the benefit that crypto investors can get from this. I hope that's quite a long rant. I hope that explains what we are trying to do from a Polytrade perspective. I guess trade finance kind of bored people, I guess.
No, actually, we've not kept it too interactive right now during the session. We've been asking them to post questions elsewhere. Right. But now that we have
that is the usual challenge that typically completely B2B kind of businesses face, right? So if you ask most of the people, what business would you like to run for yourself, they would probably say a restaurant. Right, or a cafe, because they understand it most, because they use it the most, right? Even though there are a lot of things that they don't understand. So I guess it is the same issue. So people don't understand a B2B business, so they're like, okay, how do I even think about starting a trade finance business?
Right.
That's a fair point.
Well, but we do have queries. So Vinod, we have Vinod with us, and Vinod, can you post your question to us in the chat? Yeah. So we have, how would you deal with the price protection and also validate seller or end users?
Awesome question. So basically, from a price protection perspective, right? I mean, this is a standard practice that is followed, across all businesses. Now, if you are financing an invoice of a particular currency, you tend to take the cash also in the same currency as much as possible. Now, if you don't do that, what you expose yourself to is something called as a forex conversion risk, right? So if I take forget crypto, right? Even if I take something like a Indian rupee or a GBP and start funding invoices worth which are denominated in US dollar, that creates a lot of issue, because after 30 days or after 60 days, when I'm going to collect payment for against my invoice, I don't know what the conversion rate is. So there is a lot of chances of losing out cash. So our model is completely based on stable coins. So any lender has to deposit stable coins, and any invoice that gets funded also is done by stable coins. Initially, we're going with US dollar, but as we're quite, almost everyone knows that, sooner or later CBDCs are going to come. They're going to have digital currencies which are run by countries, and we'll be happy to, absorb them into our platform and support all our businesses. How do you validate seller end users? Okay, so considering that we are completely working in a regulated business, right? This is not something which is not being done. It is not like Aave or Compound, where it comes out of nowhere and there is no precedent, there is no law. Here we have to comply with whatever the World Trade regulations and practices are, what the import guidelines are, what the export guidelines are, what the finance related aspects are. It has to be complied to. So almost all our users on a platform on either side, which be them lender or borrower, are completely KYC, right? And when we do the KYC for our borrowers, which are the manufacturers, we also do a lot of validation, whether their business exists. Are they have they done business in the past? Are they trying to launder money? Are they trying to do a cross-border transaction in the the disguise of an invoice payment, and all those specific points as such, right? So all of those things we definitely do take care. And there is if people are aware of trade finance industry, there is there was an organization called Greensill. So we have specifically a credit risk assessment lead who has come from Greensill and who is helping us set up the entire practices around how to validate and how to assess the risk for all of these players as such.
Okay, that's lovely. Great. So the next one is, what are the changes that trade finance requires to be taken on while moving on to the decentralized network, transparent network?
Got it. Okay. See, one thing we'll all have to be very clear, right? Think about it. 15 years back, we used to have internet banking and we used to have banking, correct? That is how it used to be. Today, there is no banking without internet banking. I'm sure you will not even open a bank account if you don't get access through UPI, or if you're not able to do NEFT or even able to access their portals. Now, that is the change that banking went through, right? So that is the change that finance as an industry went through. Now, the same change is right there, right in front of all of us, right? Tomorrow, there is not going to be a DeFi and a CeFi. There is no centralized finance, decentralized finance tomorrow. There is only finance that will continue to be there. Just that we will start seeing it moving more towards the decentralized models because of all the benefits that almost all of us are aware of. So that transition has to happen, not just from a trade finance industry perspective. I think it is common across all the industries, right? The biggest challenge obviously right now is interoperability, challenges around talent, challenges around how do you separate out an economy, a model driven by economy, right? Which a blockchain as such, Bitcoin as such, was conceptualized to have money as part of blockchain. How do you separate out crypto from blockchain and get the benefits of only blockchain? Now, these are the solutions that enterprises are currently working towards. Obviously, they've not figured it out, or even if they have figured it out, there are different places that come to that. Now, within trade finance also, and within trading overall as an industry, there have been multiple attempts by the enterprises to kind of bring all the players together and so on, right? So one of the biggest benefits of blockchain, or one of the benefits and the how you need to architect it, the solution itself, right? It is basically trust. Rather, you don't need to trust. So you only deploy a blockchain based system in an enterprise situation when you have third party entities on the same network whom you do not want to trust, right? The point is not, sorry, whom you want to have a trustless transaction with. There's a difference between not trusting and a trustless transaction, right? So the whole benefit of blockchain comes into that space, into the enterprise space, only when you have an ecosystem play, which means that I should have a customs agent, I should have a shipping agent, I should have a banking agent, all of these people on the same network. And right now, enterprises are suffering there, largely because it is very difficult to get everyone on board to a tech platform. I can't ask a shipping company like Maersk to come onto the same platform, a shipping company like Kuehne+Nagel to come onto the same platform, a bank like SBI, HDFC, ICICI, all to come to the same platform, but not fight about IP rights of who the platform belongs to, who the data belongs to, what level of data do I share, right? These are all the challenges that they are still trying to figure out. And I would assume that the same thing will happen here also. It will gradually evolve, which is exactly why we've taken a very different approach from a trade finance perspective, from a Polytrade perspective. We are just hitting the nail on the largest and the easiest solvable problem to start off with, right? And we will keep iterating and keep increasing our product so that it keeps covering larger areas of trade finance as such overall.
Nice. Okay, there's one more question for you, Arul. So there are a lot of frauds in trade finance due to multiple financing that's happening on the same invoice, and banks are trying to implement blockchain for that. Yeah. So how do you protect that, since you're not a part of regulated finance network, or are you taking some insurance?
Okay, so in our model, I mean, that is one very important question, right? This is the usual challenge that almost all trade financing entity actually face, is that of double financing. So the same manufacturer goes to HDFC also, ICICI also, shows the same invoice and gets the money from both the places. That is the usual challenge. Obviously, blockchain is an awesome place where you can actually solve this problem, because once that invoice has been transacted upon, it is visible to everyone that someone has already financed over here. Now in our case, like I said, we are taking a very small incremental approach to solve a very large problem as such. So we are going to from a process perspective, if you see, what we do is we reach out to the buyer, right? Buyer is a company like Walmart, and we talk to them saying that we've got this particular invoice and you have to finance, I'm going to finance this particular manufacturer. Are you willing to pay this money to me after 60 days, right? So there is a particular agreement that has been signed with the buyer stating that this particular invoice can only be financed by me. Now, if there is another, say HDFC Bank goes today, or tomorrow ICICI Bank goes, tomorrow the buyer is not going to sign that, because he knows that this particular invoice has already been financed by HDFC Bank, and that itself acts as a very small check. But over time, like exactly the question, as enterprises come along, we will see that this data sharing will happen much more seamlessly. We don't even need to go and talk to them. Everything can be digital. That is how it will evolve. And to kind of call this out, right, these kind of issues are, like I said, all prevalent. Now, as part of the Polytrade team, our business is not new, right? So we've been doing our business for the last 7 years in a non-blockchain version. So completely understand what sort of processes are involved. We've financed about $500 million worth of invoices till now, right? So we know all the nuances of what the regulation is, what the practices are, what sort of documentation needs to be done, how to protect ourselves against any kind of risk. So all of those measures are being built into Polytrade. Now, the other question was around, how do you cover yourself from these kind of, first of all, fraud, or even say willful default. Assume that tomorrow Walmart says that I don't have enough money to pay you this $95. What do you do? Right? So all the invoices that we finance have to be insurance backed, right? So there is a particular insurance called credit insurance. In fact, Unore team was the first one that we spoke to pertaining to credit insurance, and we will be partnering with them as soon as both our products are ready and live. to make even the insurance product decentralized as much as possible. Right, so the credit insurance basically covers any particular entity against willful default or bankruptcies. So if Walmart says that I don't want to pay, or I don't have the money to pay, the insurance company is liable to pay Polytrade. Right, so that is how we kind of cover our lenders' investments in Polytrade as such.
Nice. Great. Well, that was supposed to be the last question, Arul, but we have a very interesting one. So I'll go ahead and ask you so. So how are you going to mask the users of few clients who do not want to reveal the transactions when relating to financial terms?
Correct. So this again is a age-old problem. People don't want to reveal a certain level of details because the buyers that Walmart has access to itself is a very confidential information that Walmart doesn't want to share with, say, a retailer like Carrefour, right? Because that relationship gets built over time. So it is definitely a valid question, and the way that we do that is on blockchain in a direct fashion. We never post any individual or organization identifiable data as such, right? So all of that information will be completely masked and it will be posted on blockchain. Largely, see, because you'll have to try to understand what is the problem we are trying to solve here. We are trying to solve the problem of financing, right? So as long as the money gets transacted, the money gets funded and the transfer happens, there is no need for certain other transaction details, organization level details to be captured in the blockchain. So we only capture what is required, and if there is any kind of organization identifiable or person identifiable details on the particular transaction, we just kind of mask it out.
That's great. Great. I think that's about it. Arul, I think we're done with the questions. So thank you so much. You'll surely inspire many with the focus, the importance given to build, team and process, while being okay with simply dabbling with something new and making it so big. So welcome to the Polkadot India family, and we are glad that to have you around.
Thank you. Thank you very much for having me here. Thank you.
Yeah, thanks, Arul.